Welcome back. It's about to be 9 in a few minutes and we will get the pre-opening rates. So how do we prepare for the markets, and more importantly, how do we prepare for big boy Reliance, who we expect will counter any other negativity? Harshvardhan Dole, the Vice President Institutional Equities at IIFL, joins us on the phone line with his take on the latest stake purchase in Jio Platforms by General Atlantic. Good morning, Harsh. This line is just not ending. Every day, a bigger and bigger name coming in to buy stake. What does this do now? At 1450, do you think the stock doesn't quite reflect almost FANG valuations?
Hey, hi, Lata. So, in fact, these stake sales which are currently happening are broadly in line with what management has been guiding since the fourth quarter results announcement. They have made it quite clear that there are quite a few marquee names which are doing due diligence for purchase of stake in Jio. And I think a few more might happen over the next 12 months' time. With respect to the valuations, the 5.16 lakh crore valuation which has been pegged by the latest transaction is actually in line with our telco team assessment of Jio's EV. In fact, we are quite happy that the true value of Jio is getting reflected through the current transactions, which is in a way helping the minority shareholders of Reliance. So we are quite positive despite these transactions happening at such valuations.
Okay, Harsh, good morning. So in terms of sum of the part valuation, how much would you ascribe to Jio, and what would be your own target price on Reliance?
So Reliance, we have a strong buy. That is our sector top pick. Our target price is 1,640 rupees, which of course has to be adjusted for the proposed rights issue. And of that, almost more than a third is being ascribed to Jio in terms of enterprise value. On an equity basis, since the debt is still consolidated level, it's a bit tough to ascribe per share equity value of Jio, but almost 5.16 lakh crore is the AV that we ascribe to Jio when it comes to RIL's SOTP.
And on the debt particularly, Harshvardhan, if you can just give us the numbers. 1.61 lakh crores is how much the debt is currently at. Putting together all the stake sales as well as the rights issue, how much do you think Reliance can raise? And what does it bring, what does it do to the net debt to EBITDA ratio right now?
So the stated net debt, while it is 1.6 lakh crores, this of course does not take into account two factors. One, which is the deferred spectrum liability, which is there in the books of Jio, and also the creditors which are funding the capital expenditure. Now, these two elements, if you adjust, the net debt for across the consensus, if you look at, is ranging anywhere between 2.2 to 2.3 lakh crores for RIL. Now, as per the announced plans of RIL, the 1.6 lakh crore is expected to be zero by the calendar year 2020. And if the stake sale in Jio continues the way it is, that clubbed with essentially some improvement in cash flows, I think they should be able to get to that particular figure by this calendar year end. So when we say that we have a strong buy call on RIL, I think the value unlocking from here on will be driven by two things. One is, of course, essentially deleveraging. And secondly, the uptick in the new businesses such as telco or the technology business such as Jio and the retailing business. Stake sale to Aramco, which is, as per the company, very much in the offing, will, of course, lead to a significant value creation as and when it happens.
Okay. All right. Thank you very much, Harshvardhan, for joining us with your thoughts this morning. We have to get back to the markets because they've opened, and the pre-opening rates are indicating a 0.5% uptick. Actually, a much better opening than SGX Nifty indicated. But let's check how RIL is doing. Okay, Reliance is up almost 3% at this point. 1500 is hit. And then you're seeing a bit of green on JSW Steel, M&M. JSW, one can understand the global facing stocks because Asia is doing well. You should expect the Hindalco, Vedanta, Steel, all the metal stocks to get a little bit of a fillip. Although, of course, Vedanta and all have individual stories also going for them. FMCG is not doing too badly. ITC is up. What's not doing well? Coal India actually started very badly and now it is down 3.5%. Well, it's all those commercial coal mining things, but they have been reiterated and they have been reiterated. What is the fresh negative? The fresh negative is that Coal India, for the first time in its life, is raising bonds to meet its expenses. So much has this cash-rich company been denuded of its cash. So that may be a negative, actually, rather than this commercial coal mining, which is really old hat. And then you have a bit of creaming away in Bajaj Auto, Wipro, Britannia. It's a motley group. I wanted to know how the banks would do. At the moment, I'm seeing a little bit of red in ICICI Bank and none else. So let us reserve our thoughts for when the pre-opening settles. Manisha Gupta is joining in. As I said, Asia is starting with a green hue. Manisha, big moves in crude.
Oh, well, absolutely, Lata. 4% up in the Asian markets right now, and we are trading at a 2-month high. And as as we saw in the last expiry, when we saw the crude prices going into negative, we have a very smart rebound in crude prices ahead of the expiry tomorrow. The major reason that this push has come in because of the U.S. crude rig count, which has continued to decline. It is now at the lowest in nearly 8 years. Also, when you look at the IEA report, it says that the global demand recovery is expected by 3.9 million barrels on a month-on-month basis for the month of May. They also are looking at the supply surplus to contract by 10.4 million barrels in this month. So positive cues coming in for the crude prices. The base metal prices are doing positive in Asia too. And if you look at the precious metals, we have silver at a 2-month high and the global gold price is at 2012 highs yet again. So very strong week, the previous one. And today Asia has started on a very smart note for commodities.
All right, Manisha, thanks a lot. Well, the pre-open is still up about 54 points. Keep in mind, SGX Nifty is a traded rate, so I think it will be somewhere in between perhaps. But we have Prakash Diwan still with us. Prakash, I wanted your thoughts on some of these PSUs which have really destroyed so much wealth. Coal India and ONGC. At current levels, is there any point in taking a value bet here?
No, absolutely not. Absolutely not. See, there are different reasons for the kind of loss or value destruction in both these cases, Anuj. And I don't see any reversal in both of these trajectories. ONGC is, of course, been a victim of lack of international presence, lack of growth, lack of depth in the value chain, and of course the crude price erosion that we've seen since the last 3 months. Coal India, I think, has been more plagued by the lack of decision making to do anything dramatic or major to kind of increase output. And one thing that Coal India has always been plagued with, while it improved its efficiencies in terms of throughput, was the quality of coal that we talked about from Coal India. So we still had to import that high quality stuff, and the differential has never been something that Coal India could get over in terms of its improvement in P&Ls. And then the opening of this mining sector, while it may not have an immediate impact, I think over the long run, this is actually going to attract a lot of interest, a lot of capital, because this is one area which the private sector had never had access to wholeheartedly of sorts. Except for the opening of the captive mines that we saw for the mines for captive consumption in the last few years. But if commercially this were to be exploited and leveraged as an asset, I think mining is an area that will see a lot of interest, in my view, more than defense and those other things. But specifically on these PSUs, it's definitely a strong pass.
Okay, fair point. Well, I want one more set of stocks for you to analyze, Prakash. There were some, vague announcements in defense. Well, not quite vague. The FDI being increased to 70 by the automatic route to 74% from the earlier 49. Intent, it's a proposal, as well a negative list of defense items which will not be imported. It will be sourced locally. We spoke to Baba Kalyani. Hear him out. He was extremely positive. And then I want your thoughts.
I think this is something that the industry in India has been wanting for a long period of time. These are long overdue reforms, and I think this is going to boost the whole indigenization process of defense products in India, and also bring investments and create a very vibrant defense industry in our country, which can export products along with meeting requirements of our defense forces. And in that context, if you see the FDI up to 74%, I think in areas where technology is something that we don't have, I think this is a very welcome step. First of all, India needs to use its capabilities and competitiveness. I think India's capabilities and competitiveness are very large in the areas of metallurgical products. So I think anything to do with artillery guns, anything to do with small arms, anything to do with ammunition, anything to do with naval guns, anything to do with this kind of products, India can become the world's largest producer in the next 5 to 7 years. The industry has come a long way, and this is almost like a dream come true as far as I'm concerned. And I think 5 years from now, or 7 years from now, we will remember one big event, at least in the manufacturing sector, that happened during the COVID pandemic in 2020, was this reform in the defense sector.
Okay. Prakash, your thoughts? Would you pick on defense reactions?
I think, Lata, he said it all. We need to understand and identify that our strength lies in certain very, very narrow segments of the defense value chain. We can't be looking at making aircrafts, we can't be looking at making missiles and things like that for the world as yet. But what we can do and what we should be doing is using our prowess on manufacturing, especially on the intermediate side, a lot of things that go into the weaponry value chain. And remember one thing: there are a lot of smaller countries which are going to find it extremely difficult to be able to do this by themselves, which possibly was on the cards after the way the crisis is unfolding. And a lot of money and technology from Europe particularly. I'm not talking about the US as much, I'm not talking about Russia as much, but Europe particularly has always been very keen on the Indian landscape for defense. So all this is work in progress and evolution. This doesn't happen linearly at one stretch. So what he's talking about, I think, is going to be epoch making in terms of people at least wanting to look at. So you saw this German footwear company come into a willingness to come into UP and set up a unit. I don't